Okay, so today we're diving into something kind of crazy.
Yeah,
Hindenburg Research.
they're gone.
You know, the firm that was like the Wall Street watchdog,
Right.
exposing all those companies, they just vanished.
Poof.
And we want to figure out why.
It's a big deal.
Right. I mean, they were kind of a big name in finance, uncovering all sorts of corporate shenanigans.
Yeah, they made some serious waves.
So we've got a bunch of stuff to dig through today. Their last report, the news about them closing up shop, some background on how they did what they did.
A lot to unpack.
Yeah, so let's just jump right in.
Okay.
All right, so January 15th, 2025, news breaks. Nate Anderson, the guy who founded Hindenburg, announces they're done.
Just like that.
Just like that.
Yeah.
What do you think? What's the fallout from something like this?
Well, I mean, their investigations, they often led to, like, the authorities taking a look.
Yeah.
Even legal battles for some companies.
Right.
I mean, their reports could tank a stock.
Oh, yeah?
Investors lost a lot of money, millions sometimes. This actually changed how some companies acted,
Yeah.
They had to be careful. They knew Hindenburg was out there.
It's like they were the sheriff in town.
Right. And now the sheriff's gone.
Exactly. So who's going to keep things in line now?
That's the question, isn't it?
Big question. Okay, so before they vanished, they dropped one last bomb.
Oh, yeah.
This time it was Carvana.
The used car guys? The ones with those big car vending machines?
Yeah, those things are kind of cool.
Yeah, they are. But Hindenburg's report, they basically said Carvana's success, it was all smoke and mirrors.
That's the sod.
Right.
Okay, so let's get into the specifics, like what did they actually accuse Carvana of doing?
Well, they dug into Carvana's accounting practices.
Mm-hmm.
They claimed Carvana wasn't exactly being upfront with investors, not giving them the full story.
Not painting the whole picture.
Exactly.
Okay, so how so? What were they doing?
So there's this thing called gain on sale accounting. It's complicated. But basically, Hindenburg said Carvana was using it kind of like a magic trick, selling off loans in a way that hid potential losses.
So it's like making their profits look bigger than they really were.
Right, making them look really good.
Wow.
Investors looking from outside, they think the company is doing fantastic when maybe it wasn't.
So if Hindenburg was right, what does this say about Carvana's whole business model?
Well, it kind of raises the question, were they just artificially inflating their success?
It makes you think.
Yeah, and there's more.
Okay, what else?
Hindenburg also pointed out Carvana had these close ties with certain parties.
Okay.
Parties they never disclosed. Could be conflicts of interest there,
I see.
Makes their financial dealings even more murky.
Yeah.
If a company's got to resort to those kinds of things, it makes you wonder how sustainable their business really is.
It really does. And as you can imagine, when the report came out, Carvana's stock
Took a hit.
big time. Makes you wonder, right? Did this whole Carvana thing push Hindenburg to just call it quits?
It's possible. Yeah, I mean, taking on a company like Carvana,
Yeah.
they've got resources, lawyers.
They could bury you in lawsuits?
Exactly. They could hit back hard, smear campaigns, pressure from investors who are upset.
Yeah, it's a lot to deal with.
It's a David and Goliath situation, and we know how that usually ends.
Not well for David.
Right.
So here's the big question. Hindenburg's gone. Who fills that gap? Who's going to keep these companies honest?
That's the million-dollar question, right?
It is.
Their exit, it could scare off other financial journalists.
Yeah, they might not want to poke the bear.
Exactly, especially smaller firms. They'll think twice before taking on these big investigations,
Yeah, they'll be worried about the blowback.
And the regular media, they might cover these stories.
Yeah.
But they don't have that deep financial knowledge, those resources that Hindenburg had.
It was their specialty.
Right.
So for everyday investors like us, what does this all mean?
I think the big takeaway here is gotta be careful out there. Do your own research. Don't just believe the hype or those shiny company presentations.
Yeah.
Look at the financials, really understand the risks, With Hindenburg gone, it's more important than ever for investors to be informed, to be skeptical.
Not just take things at face value.
Exactly.
Hindenburg's story, it's a reminder that transparency and accountability, they're vital for a healthy market.
Absolutely.
They were fighting for that in their own way, Their work, even if it was controversial sometimes, it showed us how important it is to really scrutinize what these companies are doing.
They shined a light on some dark corners.
They did.
Yeah, their legacy, people are going to be talking about it for a long time.
Oh, yeah, for sure.
But one thing's for sure, they changed how financial journalism works, for better or worse.
Yeah.
Who knows if someone will step up and fill their shoes, if their methods will inspire a new wave of investigators. That's a story for another day.
Yeah, we'll have to see what the future holds. So that's what we're going to leave it for today. Hindenburg research, they're gone. But the issues they raised, the need for companies to be accountable, that's still very much alive.
It is.
As you're out there investing, remember, stay informed, be skeptical, don't be afraid to ask those tough questions.
That's good advice.
Because honestly, the future of financial transparency might depend on it.
It very well might.
That's it for this deep dive. Thanks for listening.
Thanks for having me.
See you next time.
See ya.